In this video, I'm going to share the best investing platform for anyone in their 30s or up, and make sure you stay to the end so that I can break down the pros and the cons of the other investing platforms that are still close, but second place in my opinion. If you're new here, welcome. My name is Mauli Voti with Financially Present, and if you're not new, welcome back. I love to share financial education to help you improve your situation. And if you like that, please subscribe and turn on notifications so that you don't miss out on future content. So let's be clear, there are plenty of investing platforms out there, but if you're at a certain age, your needs are just going to be different. And that's why some investing platforms, I'll refer to them as brokerage companies, are so much better than the newer up and coming mobile app only companies. So just keep in mind that if you're older, you're more likely to have kids or aging parents, and that's why I'm taking that into consideration with these companies. So it's not to say that mobile only platforms aren't good, it's to say that they aren't great for what you would need if you're 30 and older. Before I go into my number one brokerage company and the others that are in second place, I want to say this up front. All of the brokerage firms I'm about to name have some really good similarities. They have mobile versions of their platform, they have trading commissions that are zero for buying and selling stock, they each have banking or bank-like features, they all have zero minimums for their accounts for the most part, and a lot of them have beginner-friendly platforms, beginner and intermediate-friendly platforms. So with that, I'm going to start with this brokerage firm that I recommend the most, and that is none other than Charles Schwab, hands down. And no, I'm not endorsed by them. In fact, I didn't even choose for my accounts to be there with them, but my accounts were transitioned to Schwab after they bought TD Ameritrade some years back. And one of the details that you just can't ignore is the experience they have in the industry and the level of customer satisfaction that they have compared to others. First, Schwab has absorbed several other companies over the years, and that means you now have a company that has everything that a beginning investor would need and everything a veteran investor would need. So I'm able to manage 11 different accounts seamlessly, and I can call and get someone on the phone really quickly, or I can just chat online if I really need to reach them that way. If I want to do all the trading by myself or the investing by myself, I can do that. But if I want a financial advisor or a portfolio review, then those are some options that I have as well. And especially if you're looking for a fiduciary. So they have those options. And they also have a Robo advisor feature that doesn't charge you, but that's because they instead require you to keep a certain amount in cash, which is where they make their money. But the next reason why I prefer Schwab is what really sealed the deal. And it's really just the flexibility in their pricing. So Schwab has every single account type imaginable. And if you learn one thing about me, I like to have the options available to me and the flexibility. And the worst thing that can happen is to open up an account somewhere and realize that, oh man, I need to open up an inherited IRA or a trust account, and that online platform doesn't allow it. Well, Schwab has that and all the other account types. And it allows you so that you just don't get bored. They even create their own products like Schwab stock slices. They have their own preferred lists. If you want a list of vetted mutual funds or exchange traded funds or ETFs basically. They also have Schwab Intelligent Investing, which is their version of a Robo advisor, and that's free of no charge. Just again, keep in mind that they require you to keep a certain amount in cash because that's how they get paid. If you want the premium version of that, then there's a $300 fee to work with a certified financial planner, and then it's $30 each month after that. If you need a walkthrough of their platform or you aren't sure about whether or not you should open up an account, well, I want you to watch this video right here and see if it's a good fit for you. But if you haven't already, please take a moment, just like this video and subscribe and stay plugged into financial content so that you can make better financial decisions. Now let's talk about why I specifically avoid the other brokerage firms. And it's not just because I already have my accounts at Schwab, it's because of other reasons. And let's start with Fidelity. Fidelity, now don't get me wrong, Fidelity checks most of the boxes. They're the best overall brokerage for beginners according to NerdWallet. They're the leader in 401k providers, so you know that hundreds of companies trust them to hold their employees' retirement plans. In fact, I've even had a 401k there previously. And they're creative enough to bring as far as I know, the only Fidelity Youth account. So it's a youth-based account, which is a great take on a custodial account. And if that's something you're interested in, I did a video on that, so feel free to check that out. But with that said, the reasons why I don't use Fidelity is because I think it's more for intermediate to advanced investors. They're not the most beginner-friendly brokerage firm from an education perspective. And that's honestly the main thing. I mean, they have 216 branches nationwide. They're pretty neck and neck with Schwab because they have great research tools. Their fees are comparable, except when it comes to their Robo advisor option. You see, they don't charge a fee unless you have $25,000 and more. That's when you start to get charged 0.35% of your assets managed. But with that, you can also have access to Fidelity advisors and unlimited one-on-one meetings with them. But as far as it's concerned, it's pretty neck and neck with what Schwab offers. One thing I will note is that with Schwab, it's more of a flat fee, whereas this fee can be technically more expensive depending on the dollar amount invested when it comes to Fidelity. So what if you aren't really interested in all of those features and you want something that is much more straightforward and simple? Well, that leads me to why the next broker is really good but still doesn't have everything. Now, Vanguard, that's one of the best out there. For a few different reasons. So it's okay if you have a Vanguard account, but I think there's a chance that if you wanted to change things up or add a little seasoning to your investing, you're probably going to run into a couple of issues. But on the good side, Vanguard is the main leader and creator of low-cost mutual funds, index funds, and ETFs, exchange-traded funds. And they will give you a higher rate on your uninvested cash. So that's a plus side. But on the downside, their investing platform or their trading platform is really, really basic. So just really basic to the point that it's very clear that they do not want traders. They want investors. Okay, and don't get me wrong, I'm an investor. Personally, almost everything that I do now is long-term based with a long-term mindset. But in the event that I want to make a quick trade, I don't want any resistance. I want to be able to do that and do it quickly. And Vanguard is intentionally built as a way to promote long-term investing, which is good. I admit it is good, okay? But I just find that their research information is limited and they don't allow fractional shares for stocks too. So that's another downside. I attempted to open up a Vanguard account for my own research just to compare, and they gave me a hard time because I wasn't immediately going to fund the account. I just wanted to survey the canvas, really. So I just find that they made it a little bit harder, but that's because they have investment minimums, which is okay for them. And if that's something that you want to explore or even see what that experience was like, I did a video on that as well, so you can check that out here. But they're primarily a mutual fund and ETF company, and they allow you to purchase stocks. But their focus is retirement. Their focus is advisory, 401ks. So I like Vanguard, I just don't like being limited. Speaking of limitations, I've talked about Schwab, Fidelity, and Vanguard. And if you have an account with this next broker, don't worry, there's still hope. You'll have most of what you need. So that next broker is E-Trade. So they're another great option, and it's been around for a very long time. They started off more for traders and eventually welcomed some long-term investors, but they've always stayed true to the trader mindset. So they have comparable fees. So commissions are next to nothing, basically, if they aren't nothing. But it changes when you look at other investment types. So for example, when we're talking about mutual funds, their mutual fund selection isn't really robust. They only have about 6,500 mutual funds available, whereas Schwab has about 15,000 available. So that's a big difference. And one thing I learned about mutual funds, especially mutual fund variety, is that if you are transferring from one broker to another and the new firm doesn't carry your mutual fund, then you have to leave it behind or you have to sell it so that they can transfer the cash to that next company that you want to be with. So that can be a big deal depending on your scenario. Another thing about E-Trade is they don't allow stock purchases in fractional shares. They'll allow you to reinvest dividends, and that's how you can get fractional shares, but they don't explicitly allow you to buy fractional shares. If there are fractional shares, it can only be for stocks that are above $5 a share. So we're talking about something considered marginable stock. So reputable, larger named companies. If you're interested in robo advising, they have that too. It's called Core Portfolios, and their fee is 0.3%, which is pretty competitive, but you do have to have a $500 minimum. And other than that, most of their features are pretty comparable. Now, if you have an account with any of these brokers, you're still in a good place. They're all proven companies, and they've survived different economic environments, so you can be comfortable with that. They've either managed to thrive or stay relevant or be purchased by other companies. And I know several other brokerage firms that are smaller or all online, and they do mobile platforms, and they're cool. They just tend to be a little bit more catered to those that are younger than 30. So ultimately, you're able to open an account where you feel most comfortable, obviously, but the ones that I named before are, I would say, the most robust for the average investor. So let's recap. With Schwab, you can get everything you need, and it has the best bang for your buck, in my opinion. Fidelity, you can get everything you need, but there are some things that cost slightly more and you won't have the most trading flexibility. Vanguard, well, you'll get most of the best costs, but you won't get much trading flexibility, and they have account minimums. And then lastly, E-Trade, you can get mostly everything you need, but it's gonna cost you a little bit more. Obviously, you are free to open up accounts wherever you want, but I do wanna caution you, just be careful with some of the new mobile-only brokerage companies, because some of them are still really just new to the investment industry, and they have some enticing promotions, and they're gonna grab newer and younger investors, and that's good, but they may not have a long enough track record or the resources to truly win your business. So if you like this video, let me know, and if you need to learn more about the Schwab platform, I have just the video for you. Until next time, stay present.